If you watched any of my videos as of recently, it's probably pretty annoying at this point, and I made it quite obvious that SPYI, or the NEOS S&P 500 High Income ETF, is one of my favorite new ETFs that I've been buying like crazy over the past several months and is generating a ton of fresh, brand new dividend income for my portfolio. Now, ever since I've been buying a ton of SPYI over the past several months, like I said, my monthly dividend income is exploding, and that's of course because the higher than average dividend yield that SPYI has offered, at least historically. And as of right now, filming this video, I'm sitting on around 395 shares of the NEOS S&P 500 High Income ETF across my portfolios, which equates to just around $20,000 that I invested so far into SPYI with no signs of stopping. Now in this video, we're going to dig deep into SPYI just to showcase exactly what this ETF is, how it works, and what it has to offer, especially for investors that might not be all that familiar with it as of right now. Then later on, I'm going to share with you exactly how much dividend income, at least on average, I'm earning from my 395 shares on a monthly basis, and it's a ton considering the small amount, relatively speaking, I have invested into it. So if you're a dividend income focused investor that wants cash flow ASAP, make sure to stick around, drop a like down below, and let's get right into this one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, as promised, before anything else, let's go over SPYI right here on the NEOS website, learn how this ETF works, see what it has to offer, and why I'm so obsessed with it. Now, to dig a little bit deeper into how the SPYI strategy works, it says right here, number one, the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven cover call option strategy. So very similar to other cover call funds out there. In this case, we're talking about the constituents of the S&P 500 index, which of course are great holdings. I don't think any of us would really have any problem with having more exposure to the S&P 500. And then on top of that, the fund manager uses cover calls to, of course, generate premium, which is paid out in the form of dividends. But that's not all this ETF offers. Listen closely. It says actively managed by NEOS, the fund takes advantage of tax loss harvesting opportunities, in addition to utilizing SPX index options, classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. Now take my word for it, as you build your portfolio over time, and I'm sure a lot of you are already very aware of this, you're going to want to think about taxes because, of course, as you start to generate a ton of dividend income, for example, they might not be taxed very favorably. Now, number three, this is also one of my favorite parts about this ETF, and this is another reason why I really decided on going a little bit bigger in this ETF moving forward. It says the fund utilizes a call option strategy. Not selling options, but buying call options that may include both sold and purchased SPX index options, which may provide the opportunity for upside capture in rising equity markets. So one of the main problems with a lot of these different cover call ETFs is that when you sell a cover call, your upside is basically capped. If the underlying moves up very quickly, you're not going to be exposed to all the upside. But with SPYI, because at times they are also buying call options of things like SPX, that means that if and when the market turns bullish, you're going to have potential exposure to the upside taking place in the market. Now, I thought this was also interesting and insightful. If you were to stack up SPYI next to some of the other high quality, keyword there, high quality, income oriented or income generating ETFs out there, and look at things like total return, yield, etc. All the way at the right, we have total return year to date, and this is SPY is up 28%. It's very hard to outperform SPY, of course. But coming in number two at almost 19% total return, SPYI with 12.1% of that being dividend yield. Now, right behind SPYI is one of my other favorite holdings. We have Devo, and then we have jepi, and then behind that is qyld. But it is just sort of interesting stacking up SPYI next to some of the other high quality, more popular income focused ETFs and see how they've all performed as far as total return goes, at least during this time frame. Now, looking at SPYI's performance, at least as of so far, on the 1 year time frame, the ETF is up 2.42%, which is nothing to really jump up and down about. But considering this ETF is offering like a 12% trailing 12-month dividend yield, I will happily take a 2.42% gain if it means I'm going to get paid 11 or 12% in dividends per year. Now, in the max time frame, SPYI still is green, which is awesome. Once again, because this ETF pays such a high dividend yield, as long as it's not decaying, in my opinion, it's good. Now, with SPYI's most recent dividend payouts, we are seeing a little bump. As of last month, it was 50 cents compared to 49 cents. But overall, the management seems to still be on cadence, paying investors like myself in the upper 40s to 50 cents per month in dividend income, and that's for an ETF that costs just sub $50 per share. Now, this is one of the main reasons I'm buying so many shares of SPYI, just to diversify my portfolio a little bit, have more exposure to some higher yielding assets. And what's really motivating about buying SPYI is that every single time I spend $50 more or less, depending on where it's trading, on a single share of SPYI, I'm expecting more or less a 50-cent dividend, which is extremely motivating if you ask me. Now, like I said earlier, because I'm currently holding around 395 shares of SPYI, and side note, I'm buying around 1 to 3 shares on average every single trading day, so this will go up over time. But as of right now, I'm earning just under $200 per month in dividend income from SPYI, which if I wanted to drip that back into more shares, of course, I could purchase almost 4 complete shares of SPYI as of right now on a monthly basis. Now, I personally will probably keep growing this position of SPYI for my portfolio until it gets to maybe the 1,000 share mark. I'm never going to be someone that's going to invest a significant portion of my overall portfolio into these sort of assets because that just doesn't really align with my overall strategy, but I definitely am going to continue to buy more SPYI as the weeks go on. Now, lastly, I think it's also important to stress test SPYI like we do with other stocks and ETFs on my channel, see what the actual total return of this ETF is so far. Yes, it's great that this ETF pays me more or less 50 cents per share per month for every single share of the ETF that I've been buying, but what is the true total return? If the ETF isn't really moving up in price all that much, am I still making money? Well, let's see. So at least so far since inception date, with a $10,000 investment and dividends reinvested into SPYI, which is what I'm basically doing as of right now, an investor would have had around a 22.19% total return, and this is in 1.75 years, or around 12.11% annually. Now, honestly, every investor is different. Some investors might say 12% per year is boring. I want to try to get to 20 or 30% per year. And some investors might be happy with maybe 5, 6, 7%. For me personally, 12% I'm perfectly happy with, especially knowing that with dividends not reinvested, meaning that if you wanted to take the dividends out, spend it on whatever the case might be, you still would have almost had an 11% average annual total return by buying SPYI at least since inception. Now, for all those reasons and more, I'm going to continue to buy more and more of one of my favorite cover call style income ETFs as the months go on, at least until I build up a position that I'm happy with. At this point, we're sort of getting into the weeds, and I really don't like talking about taxes all that much on my channel because I think that taxes are such an individual situation that can be so different, determining many different factors, but also looking at things like this right here. Just for an example, it is in connection with the monthly dividend payment of 47.5 cents per share that was paid back in January 2023, just for an example. It shows that 94% of such dividend will be return of capital. Now, return of capital is going to be taxed differently than ordinary or non-ordinary dividends, etc., etc. And like I said, I'm not going to go super deep into that, but just know that SPYI could be a perfect ETF with a great tax strategy for your portfolio, depending on what your needs and wants are. But now lastly, when it comes to SPYI or other higher income ETFs, I have a question for you guys down below. What is your number one favorite covered call style, high income style ETF across the entire market? We're talking SPYI, jepi, jepq, qyld, whatever the case might be. Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.